Hello everybody, here with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlooks, starting with a short coverage of the US markets. The main indexes, the Dow and the Nasdaq, were slightly up yesterday, thanks to the lowering value of the greenback. A few events from yesterday, all of them pretty much came out negative. NBA mortgage applications, building permits, housing starts, again, month on month worse than expected. The PPI index came out again worse than expected, month on month and year on year. Industrial production 0.1% worse than expected. Capacity utilization worse than expected. PPI excluding food and energy worse than expected, month on month, year on year. And the 4-week bill auction again lower than previous. Only the Red Book index came out higher than expected year on year and month on month, and the wholesale sales month on month in Canada came out 2.2% better than expected. FOMC meeting minutes quite dovish. The Fed officials worried about hiking rates too soon. They debated on the impact of current low inflation. They're also going to take into account international relations. The central bank is targeting June as the month to begin the rising of the rates. For today, we have initial and continuing jobless claims, the CB leading indicator month on month, and the Philadelphia Fed manufacturing survey. The European markets reports, the DAX and the CAC went up yesterday, 50 points for the German and 20 points for the French index. The EU construction output came out slightly negative and worse than expected, and also the Swiss ZEW expectations, which measures business employment and other conditions affecting the day-to-day running of a business in Switzerland, also came out with a negative outlook. For today, the Swiss trade balance already came better than expected with positive exports and lower imports. The EU current account misses expectations just about 15 minutes ago. We will also wait to see the consumer confidence reports, which will come out from the entire EU zone, which is also projected to remain in the negative territory, but should come out better than previous. Also, the ECB non-monetary policy meeting, which contains an overall of official market, economic and monetary developments in the European zone. Moving along to the UK markets, the FTSE 100 yesterday fell with 21 points, closed at 6,856 points yesterday. The British pound rallied against all of its 10 major rivals, gaining about 0.5% against the dollar and about 1.1% against the euro. The reason was the overall positive numbers in relation to wage growth and the falling unemployment, which is at 6 years low. The MPC decided to keep the interest rates at the all-time low of 0.5%, with two MPC's decision was described as finally balanced. The round of positive economic data coming from the UK is fueling speculations on the time of the interest rate hike. Apart from this, political instability is still dangerously looming over the positive performance of the pound, as a major hedge funds are preparing themselves for the high volatility that will surely be witnessed in the weeks before the election. The overall sentiment, we could say, is pretty much bearish. Moving along to the Asian Pacific markets, basically, the Nikkei 225 is currently at 8 years high, thanks to the finally depreciating yen. Also because of the low currency value, we finally saw improvements in the exports and a large jump in the foreign investments in bonds and stocks in Japan. Yesterday, the reports came. No major movements of the Asian Pacific currencies, with somewhere about 5 to 6 points. No major calendar events for the Aussie and the Kiwi, as well as the Japan and the China economies by the end of this week. Moving along to the commodities sector, the S&P 500 index had about 11 points range yesterday, going sideways. The last two trading sessions. Overnight, the gold remained in negative territory yesterday, despite the release of the surprisingly weak U.S. housing data. By the way, our recommendation to our traders yesterday was short below $1,218, targeting 1,208. Next target 1,197, and final target $91 per troy ounce, where we obviously hit the first two targets and $1 more was left to reach the last one. The comeback rally of the in oil paused on Wednesday, with crude prices falling 5% or more after traders and investors were overwhelmed by the latest estimates for the U.S. supply builds that came out in nearly 5 times above market expectations. Supply rose by 5 million barrels in the week ended February 6th. The U.S. natural gas prices swung between small gains and losses on Wednesday as the market participants looked ahead to fresh weekly information on U.S. gas inventories. Today, EIA, National Gas Storage Change, and crude oil stock change are due in the late afternoon European time. That was all from me from today. Thank you very much for your time. I wish you a successful trading day. Cheers. Bye-bye.